Good afternoon, everyone. Thanks for joining us. Going to give it a few seconds while everyone comes in. GB will be presenting with us today, so he should be logging in shortly as well. So I will go on mute while everyone comes in. Thanks for joining us. Again, good afternoon, everyone. Thanks for joining us. We're just giving it a couple of seconds while everyone came in. GB will be presenting today, so it should be good. So just sit back and give us a few minutes while everyone comes in. Thank you. All right, looks like our numbers are setting. I will go ahead and share my screen. Let's see. I don't have a colleague on quite yet, so I'm going to have to defer to you guys. Just let me know if you are, hold on. Let's see. Can you let me know in the chat and just confirm that you're able to see my screen okay, please? Thank you, thank you. Awesome. Thank you so much. And I'm assuming everyone can hear me just fine. So how about I dive into the intro, and by the time we complete that, GB should join us. Today's session should be really good. For those of you who were part of our session last week, Mike went over some marketing tips. So if you'd like to have a link to our YouTube playlist where you can view that, just let me know and I'll pop that into the chat. So for now, I will jump into the intro. Good afternoon again, everyone. My name is Lauren Simpson. I am with the SBDC, or the Small Business Development Center. We're a national program with over 1,000 locations across the country, and we offer no-cost services to local small businesses. Now, our services are at no cost to you because your tax dollars have already taken care of our fees. So please be sure to get in contact with us so that we can help you out. There we go. For the Los Angeles network, which is the network I represent, or we represent. Hello there, GB. Just going through the intro really quickly. We service the areas of Los Angeles, Santa Barbara, and Ventura counties. Now, if you are within any of those counties, be sure to get in contact with one of our physical locations. You can see them on the map in front of you. We're in Camarillo, Santa Clarita, all the way over to Laverne. That's this way mark all the way to the right by Ontario. We're throughout Los Angeles, the South Bay as well, all the way down into Long Beach. Now, I mentioned those locations, and here's why you want to get in contact with us. We offer no cost business advising, and so you're able to meet one-on-one via Zoom currently or by phone with one of our business experts. And those expertise range from construction to finance. If you are looking to create a business plan, so you're just starting out, we can help you. And then we also offer advising and virtual trainings for those businesses who are looking to adapt as well as grow. I mentioned virtual trainings. Those trainings are comprehensive workshops, much like the workshop you've joined today. So be sure to get in contact with us today. If you are within the LA area and you want to reach us by phone, go to 866-588-7232. If you are outside of the Los Angeles area, and I know the slide says LA, but if you're outside of our service area, so that means the Los Angeles, Santa Barbara, or Ventura counties, please be sure to go to americassbdc.org/find your SBDC. I will go ahead and stop my screen share, but quick housekeeping, GB. Let's be sure that everyone puts their questions into the Q&A. And as you're putting your questions into the Q&A, please be sure they're on topic so that GB can keep with the flow of his presentation. And then the chat will be reserved for any comments or any links or resources that GB would like to share with you. With that, GB, I'm going to throw it over to you. Oh, you're on mute.
Thank you so much for the introduction.
Sure.
It's good to see you. And
GB, I think you just went back on mute.
how about now? Perfect. This is good now. So today's topic is going to be clean vehicle credit. And there have been a lot of questions from my clients. I'm assuming clients that are SBDCs on this webinar today may have questions on what qualifies, what doesn't qualify, and if they bought a vehicle previously, does that qualify or not? So the qualification is based upon the delivery date. There was a tax credit available last year, then with the new act of Congress that was revised and made more lucrative. So if you just walk away with one thing from this webinar, it is that your credit will depend upon when you took delivery of the vehicle. And this is why some of my clients actually deliberately push the delivery date so they could qualify for a better tax credit. So there's a tax credit available if you took delivery in 2022, or if you took delivery in 2023 up until tax year 2032. So you don't have to rush out there and buy all these vehicles right now. If you need a vehicle this year or next year, you basically have until 2032 unless the act of Congress changes that. So I always remind my clients, Congress giveth, Congress taketh away. As some of you may remember, under the employee retention tax credit, we were supposed to get it, for many of our clients were supposed to get it for Q4 of 2021, but under the Transportation Act, they took away Q4 and only Q1, 2, and 3 qualified unless you were a new business that was started during the pandemic. So even though this credit is available until 2032, there are no guarantees. It is there today, maybe there next year. Don't know if it will be there the following year or not. So for 2023, if you take delivery of your new EV, a qualified vehicle, the list is long and it changes periodically. So look at that list first. Your credit is up to $7,500. The other thing to keep in mind is this credit is non-refundable and there is no carryover. So some of you may remember who may have qualified for a tax credit back in 2017 or 2018. If you didn't have enough income, you could carry forward that credit, not this one. If you buy an EV vehicle, the idea is you must have the tax liability. If you have a tax liability, which means you have taxable income after all the deductions, after all the other credits, if you have taxable income, you can apply this $7,500 credit towards that tax bill. If your tax bill is only $3,000, your tax credit is $3,000. If you don't owe any money to the federal government, your tax credit is zero. Unlike the ERTC, which was a refundable credit, which means if your tax liability is lower than the credit, the federal government gives you that credit. Some of you who have children may recall that during the pandemic and even before and after, depending on your income, if you are taking child tax credit, portion of that child tax credit is refundable, which means if you don't have taxable income, the government will give you the money. Earned income credit, same thing. If you have no taxable income, it's a refundable credit. Whatever money is allocated to you, if you don't have taxable income, it is given to you as a refund. Non-refundable means no tax liability, no tax credit. So people get excited, $7,500, assuming you owe at least $7,500 in tax bill. Same thing if you owe $10,000, now you owe $2,500 because you have $7,500 in tax credit. So no tax credit, no tax bill, no tax credit. It must be an electric vehicle or a fuel cell electric vehicle must be purchased between 2023 and 2032. And we'll talk about it, what does purchase mean in a moment. And the other thing is a car must primarily be used within United States, not North America, just continuous, or actually even the other Hawaiian Islands and the Alaska, but it must be used primarily in US. So if you do a lot of business across the Canadian border or the Mexican border, or if you buy the car and you send it to your home in Mexico or somewhere else, you may not be able to qualify for the credit should you get audited. So the vehicle must primarily be used within the US. And then there are some AGI, the adjustable or the adjusted gross income limitations. If you file married filing jointly, your AGI, after you take the certain deductions, such as IRA deductions, if your adjusted gross income is over $300,000, you cannot take this credit. You're making too much money and you are disqualified. If you're head of household, $225,000, and other means single, married, filing separately and such, if you are other, your limit for AGI is $150,000. And keep in mind, you take the credit in the year you take delivery. And also when it comes to the AGI, you can use the AGI from the year of delivery or your prior year AGI. So maybe you got the car in 2023. And let's say your 2023 income is going to be higher than these limits, but your 2022 income was lower. So you can qualify on the AGI based on 2023, because this is a 2023 credit. The delivery date must be on January 1st, 2023 or beyond. So you have the option in 2023 to use the AGI from this year or the year prior. Same thing, maybe you buy the car this year. Last year, your AGI was too high. You took delivery this year of delivery. You can use the AGI from this year. Before I go on, Lauren, any questions that may have popped in?
So there was one question in the chat, GB, and it says, does a hybrid count as an electric vehicle?
It may not, because it must have an external charging system, and a hybrid may have some internal combustion or some other internal power source. So from what my understanding is, it must be a fully electric vehicle. Imagine a Tesla, the most popular one, or a fuel cell electric vehicle. So there's a distinction. So this is why I suggest before you make the purchase, your dealership should know, but sometimes people are underinformed or misinformed or unscrupulous, you never know. IRS does have a website, so I would encourage you to just do a Google search on which vehicles qualify, and that list can change periodically. So, but my understanding is hybrid don't count.
Thanks, GB. There's another general tax question, but I'll let you continue your presentation.
Perfect. Thank you.
Oh, does a plug-in hybrid count?
Yes.
Does that change?
Plug-in hybrid. Again, there's a long list, so it will be hard to answer those questions. I would suggest consult the list that the IRS provides, because if it's a plug-in hybrid or something, I don't know. My understanding is plug-in hybrid don't count, but because hybrid basically means there's electric component and there's some other component. So that, hey, if you don't have time to charge your vehicle, you won't be out of power. You will still be able to get to your destination through some other power source. My understanding is it has to be a pure electric or a fuel cell electric vehicle, so EV or FCEV. I don't see the word hybrid in the IRS code, or not the code, their instructions. So my leaning is towards hybrid doesn't count, but hey, there could be a hybrid out there that has all maybe FCEV and just EV, I don't know. So hybrid usually means there's something else. Consult the list is what I would suggest.
Thanks, GB. I think we're good to go for now.
So qualified vehicles. So beyond the list, there are some general criteria that you may want to keep in mind, that the GVWR, which is a gross vehicle weight rating, should be less than 14,000 pounds. Most cars are anywhere from 5 to 6 to 7,000 pounds. So most of your vehicles should count. Now the 14,000 pound kicks in because you may be using a commercial vehicle that is also EV for business purposes. This 2023 credit is available to businesses and to individuals. So this is why the limit is 14,000, because there could be some commercial delivery vehicles that may qualify, but you want to keep in mind, again, look at the list. The list is quite exhaustive. You know, I showed all of these things so that you can keep in mind what you're looking for, because especially if you're using a vehicle for the business purposes, you have to take a look at some depreciation rules as well. So because the 14,000 rule is there, depending upon what you're getting, the easiest way to do so is have a car in mind, look at the list, see if it qualifies. Because there's also the battery capacity. Sometimes you may have seen even Teslas, they come with different range of batteries, the long range and the short range. So the battery capacity for the EV vehicles should be at least 7 kilowatts. Again, are you going to look around for that? Maybe, maybe not. Are you going to look for the GVWR? Maybe, maybe not. So this is why having the list allows you, from the IRS, allows you to reference which vehicle may qualify for how much. And of course, the final assembly must be in North America. Now, there is a dollar limit. The dollar limit is $80,000 or less for vans, SUVs, and pickup trucks, and $55,000 for sedans and any other vehicle which is not a van, an SUV, or a pickup truck. What the price includes are all the options, all of the accessories, and all of the trim features and options that you may be opting for. It does not include destination fees, and it does not include excise taxes, so your sales tax and DMV tax and all that stuff. So if you are going to spend a lot of money, keep in mind there is a dollar limit, 55,000. So there are some Teslas for 85,000, 100,000, 120,000. So there is a dollar limit for 80,000 for vans, SUVs, and pickup trucks, and 55,000 for other vehicles, which includes the base price, all the options, all of the accessories, and all of the trim that comes with that vehicle. Any question before I go on to the next slide? Seeing none, I guess. I'm going to move on. Now, for 2022, the rules are a little different. For 2022, the dollar credit amount is also different. So as you saw here, the battery must be 7 kilowatts. If you took delivery of the vehicle in 2022, there is a different tier. So you get $2,917 in credit for up to 5 kilowatts of the battery, and then $417 for each additional kilowatt over the minimum. So this is where, again, looking at the list, you may be better served on, especially if you took the delivery of the vehicle last year. Now, again, the credit here is $7,500, but it is tiered. So for 2023, the credit is $7,500, must be at least 7 kilowatts of the battery capacity. But here it's a little different. So as you can see, if you take 417 times 2, it's what, 834. You add that to 2917, so your credit may be 3,800 if you took the delivery of the vehicle last year and it's a 7 kilowatt battery. Whereas if you took the delivery this year, then the credit is 7,500 as long as the battery capacity is minimum 7 kilowatts. So it is a little different of the dollar amount of credit that you can get. And this is why you may have seen Tesla change their pricing to accommodate some of the tax credits. Again, the credit is non-refundable, and there is no carry forward or carry back of this credit. You buy the vehicle in the year that you take delivery, that's the year you can take the credit on this vehicle. So the purchase date and the delivery date. This is something that is important because to qualify for the tax credit for 2022, you must have entered a binding contract. So this is where every state has its own definition of binding contract between December 31st, 2021 and August 16th of 2022. And you must take delivery on or after August 16th, 2022. And if you do, then the 2022 rules apply. Otherwise, the 2023 rules apply, and depending upon when you take the delivery. If you took delivery of the vehicle in 2022, then you must take credit on your 2022 tax return after the delivery of your vehicle. Now, why is that important? Because you may have entered that contract by August 16th, but you took delivery after August, and maybe the delivery happens in December. Maybe you still haven't received the delivery, because we think of Teslas, but there are other vehicles out there that may have a delayed delivery. So the delivery date means that you can take this credit because you enter the contract by August 16th of 2022. You take the delivery. If you take delivery in 2022, that's fine. But if you take the delivery in 2023, because you enter the contract at that point, you will still take credit on your 2022 tax return. And this is where the IRS has said, if your delivery is delayed, then you still must take delivery on the original tax return or the superseding return or the amended return. Now, the good thing or the bad thing is everybody in California has been extended, entities and personal, to October of this year because of the winter storm. So even if you take delivery this year, you can still take credit on this tax return for 2022 because you have until October to file. But for somebody else who may have already filed and take delivery later on, they will have to either amend their tax return. If they're in a different state, they have to take the amendment or a superseding tax return. So the purchase date and the delivery date come into play depending upon whether you play by the rules for 2022 or you play by the rules in 2023. But keep in mind, whether you play by 2022 rules or 2023 rules, you cannot take delivery, or I should say, you can only take the credit after the vehicle has been delivered to you. So this only applies for the contracts, because if you enter the contract on August 17, 2022 or later, and you take delivery in 2023, you take the credit on 2023, $7,500. This is what confuses people sometimes. So this is where, are there any questions, Lauren, that may have come in on the delivery date versus a purchase date?
The only new question related to this topic would be, can credit be taken on used vehicles?
We'll talk about it in a minute.
Okay,
yes.
That's it.
Perfect. So again, the qualified vehicles for the 2022 rules are, again, an external charging source, GVWR of 14,000 pounds or less. And here's the other kicker. This is why the list is important, because if the manufacturer must have sold in that model 200,000 vehicles or less. So by the time you get your vehicle, if other people have received already and the max of 200,000 vehicles has been met for 2022, you don't get to take the credit. So this is why it's important to consult the list, and all the IRS says is must have an external charging source. So again, going back to the question of hybrid usually means there's some other power source. Where is it coming from? Is it on board, off board? Consult the list, and the list may change, especially for 2022, because there is the 200,000 unit limit. And again, the car must be purchased between August 17, 2022 and December 31st, 2022, and must be assembled in North America. Now the used vehicle. So do used vehicle qualify? Yes, they do. But because they're used, somebody else may have already taken credit on it. So this is where the credit limitations may kick in. So to purchase a used car, you must take delivery on January 1st, 2023 or beyond, not for last year. Again, must be an EV, which is electric vehicles, or FCV, which is fuel cell electric vehicle. Model year at least 2 years old, and the AGI requirements are half. So this is the AGI requirements we looked at before. So for the married filing jointly, your AGI must be 150,000 or less. For head of household, half of 225, or others 75,000 or less in AGI. So this is where for the used vehicle, totally different rules. Must be at least 2 years, model year at least 2 years old, half of AGI, must take delivery this year. And now the maximum credit is 30% of the purchase price, or $4,000, whichever is maximum. So let's say if you buy a $10,000 used vehicle, electric vehicle, the credit is going to be $3,000. If you buy a $15,000, well, 30% is $4,500, you're maxed out at $4,000. Again, assuming that you have taxable income, and assuming from that taxable income, you have tax due, because when you have multiple tax credits, there's a hierarchy on which tax credit is taken before than the other one. So you don't just club them all together. There's a hierarchy, and it is important because, like I said, some tax credits are refundable, some are not. So this is where, when you do your tax return yourself or with a professional, you want to be mindful of which tax credit do you take first. After the hierarchy, the pecking order has been satisfied, do you still have a tax bill remaining? And this credit also is non-refundable, cannot carry it forward. So if you don't have tax bill, you don't get to take the tax credit. And the purchase price must be $25,000 or less. So if you buy a vehicle which is $25,500 or $26,000, cannot take the credit. So the credit is 30% of the purchase price, maxed at $4,000. It must be purchased from a licensed dealer. So that's the other requirement as well. It must be purchased from a licensed dealer. The AGI requirements are half. So which means if your AGI maxed it out at 75,000 as an individual, you may not be able to take this credit. So 2022 rules, 2023 rules, and then the used car rules. Does that satisfy the question that had come in, Lauren? One question that came in is, the new IRS October tax deadline automatic, or do entities need to file an extension? Does it apply to California tech deadlines too? So yes, California has conformed and it is automatic. Everybody has until October to file. Remember when the pandemic started, that year, the deadline was changed to July. And then if you extend it, it was extended to October. There were a lot of issues back then. So learning from those issues, IRS went county by county, and now almost every county is included. I think all the counties are included, and California conforms to it. So
GB, did you see the note in the chat that says 30% of 25K is 7,500? That more than 4K.
yes. So this is why that purchase price limit is it doesn't correspond always, because once you reach, what is it, almost like 13,000 maxes out. So that requirement is, if you end up buying a used Model X, you may not qualify. So it's just different requirements. So it is still a $4,000 credit. So if you end up buying, so the 30% limit, but they don't want you to buy a really nice car and still qualify. So the dollar limit is 25,000, which is irrespective of the math that is involved. Once you reach 15,000 purchase price, you still cannot take the credit, because 30% of 15,000 is 4,500. So the 25,000 is if you end up buying a high-end used EV car, no tax credit for you, period. Forget the 4,000 max, because at 24,999, you can still take the $4,000 credit. So at $25,001, the credit evaporates.
The follow-up was, how is the max credit calculated? I feel like you kind of just went over that though.
Sure. Which one? Sorry. I'm sorry, I didn't understand your question.
The follow-up question was, how is the max credit calculated? I know you kind of just went.
Yes. So let's say if your purchase vehicle is, the purchase price is $10,000. Maximum credit is $3,000, because 30% of 10,000 is $3,000. Let's say you're purchasing a vehicle for $12,000. 30% is $3,600. You're still okay. You buy, let's say, a $15,000 vehicle. 30% of 15,000 is $4,500. Your credit is $4,000, not the 30%, because you have reached the 4,000 max limit. Let's say you buy a $20,000 used electric vehicle. 30% of 20,000 is $6,000. Well, the max credit is 4,000. So you take 4,000. So basically once you cross, what is it, $14,000 purchase price, your credit limit is $4,000, period. Once you cross $25,000, your credit is zero. So you want, if you're going to buy a used EV to try to get the credit, the goal is to not go beyond 25,000 if you want the credit. If you don't want the credit, if you're getting a really phenomenal deal and you're getting, imagine this, you're getting a $30,000 car for $26,000. Mathematically, why would you walk away from that deal if you really want that car? The car is worth 30,000 and you're getting it for 26,000. Objectively speaking, you're still pocketing 4,000. You don't get the credit, but you're still getting a nice vehicle that you want. But if you can further negotiate down to 25,000 or less, it's only $1,000 difference. Hey, you get to get a $30,000 car for 25,000, plus you get a $4,000 credit. Now your out-of-pocket max is 21,000. But if the licensed dealer goes, nope, 26,000, take it or leave it, and if you take it, you got a $30,000 car for 26, but no tax credit. So the $25,000 is irrespective. It is just, hey, once you cross that mark, no tax credit for you.
Thank you. Gail says thank you. So she completely understands.
Perfect.
Or I'm sorry, Gail completely understands. There's one more follow-up, GB.
Yes. Yes.
If you bought a used EV in 2022, you can't take the credit?
No, must be bought on January 1st, 2023 or after.
Great. We are good for now. Thanks, GB.
Perfect. So this is a presentation that I had for today. Now I'm open to other questions that you may have. So the idea is power up. If you really want an electric vehicle, get it. And this is where I always tell my clients, tax advice follows financial advice. Don't try to overextend yourself by getting a new car or a used car just for a tax credit. First of all, you must have the proper AGI limits. You must have the tax bill to contend with, because if you don't have a tax bill, you don't get smitten by 7,500 or 4,000. If you don't owe anything, or if you only owe 500 or $1,000, that is your limit. So tax plan always follows the financial plan. And that's what I always encourage all my attendees and the clients to remember that.
Thank you, GB.
Sure.
So I have one question that says, well, actually, let me go to the Q&A really quick.
Sure.
If we are filing taxes quarterly, what is the website that we go to in order to do so? Second question is also, are there any documents available for helping us track our finances and expenses?
Let's say the second question first. Are there any documents to help track finance and expenses? There are plenty, right? You can use Excel, Google Sheets, Mint, Quicken. I mean, there's so many options out there. So it all depends upon how much time or how much money do you want to spend. The reason why people use QuickBooks is because it's a platform that allows them to enter one transaction once and it records it on the balance sheet, the income statement, the cash flow, and all that stuff. If you're doing the P&L and you're doing the balance sheet manually, you make a purchase, you have to punch in a bunch of digits, or you have to create your own formulas so that it does the work for you. So are there documents available? Plenty. There are many templates. There, even if you have a MacBook or an iMac, or even some Excel, have pre-built-in templates to track your finances and expenses. It just depends upon how much time or money do you want to spend on it. Now, if you're filing quarterly taxes, it depends upon if you're filing quarterly taxes for which tax agency. For IRS, you go to irs.gov, and that's where you pay the quarterly taxes. If you are doing with the state of California, you go to ftb.ca.gov. If you're doing it with EDD, or if you're doing it with CDTFA, each tax agency has its own website where you can go in and pay the estimated taxes. Now, keep in mind, the estimated quarterly taxes is just a payment. There is no tax filing. If you are running a payroll, you may have quarterly filings, the 941s for the payroll purposes, but if you are Schedule C, or if you are even a job seeker and your employer is not doing enough withholding, or maybe you, I don't know, sold a property or you had capital gains on which nothing was withheld, if you are just an individual taxpayer, all of those transactions are reported on your 1040 when you file them whenever you file them during the tax season. But the estimated tax payments are just like, hey, I estimate I made this much money. I estimate not enough withholding has happened. So I estimate this is how much I may owe you. So here's my money. Next quarter, well, I paid too much and I thought I would make more money, but I'm making less money, so I don't owe you anything. Or I made even more money, so I'm going to pay a revised higher estimated tax or the same that I paid in the last quarter. So there is no necessarily filing when it comes to the IRS or franchise tax board income taxes, but payroll taxes, sales and use tax, those quarterly filings are filings and payments. So this is why this question is rather broad. And I would suggest having a little bit more narrow scope so that you can appease each tax agency according to their rules, because each tax agency has its own rules. And keep in mind, using the example, maybe you have a job in California and the property you sold was in Arizona. So you may owe quarterly taxes to Arizona and or to California, and each state has its own rules as well.
Awesome. Thank you. Oh, there's a follow-up. I was referring
Yes.
to sales and use taxes. Is that CDTFA?
That is CDTFA, California Department of Tax and Fee Administration. Yes. So that you would have to go to their website, CDTFA's website, and they used to allow a quick access code and PIN to file and pay, but now they want you to have a profile with them so that you can do all your filings and pay. So that will be a CDTFA.
Awesome. Thank you, GB.
Sure.
Let's close those two out. We have a question in the chat. Well, two. So the first is, where do I find more? Oh, wait, we already talked about that. So the second one is, what manufacturers are now over the 200,000, limit?
I don't know. This is where, again, do a Google search on it, the IRS list. So I don't know which already are. I know some Teslas already are, but this is why sometimes it's better. Again, remember, the idea is this credit is created to promote innovation and to give the small guy, small girl, small company a chance. So a new company that comes on board, everybody knows about Tesla. It's like the standard bearer for the industry. So people grab up Teslas rather fast, but the other companies, they have a long way to go. So they usually stay on the list much longer. Anything else I missed?
Oh, did I not address? I thought you had. Where can I find more info about how to apply for ERC?
Good luck. Because the rules for ERC have changed dramatically. And this is where, if you were shut down during the pandemic, then, we have done the webinars on that topic previously, then it's easy to qualify. If you have partial shutdown, it's easier to qualify. Now there are other rules where, hey, maybe you were not partially shut down, but the people and the vendors you rely on were partially shut down. So the idea is, if you were partially or fully shut down, you qualify. If you are not partially or fully shut down, or if the key vendors or key suppliers that you depend on were not partially shut down or fully shut down. Imagine, I have a client who ordered a dining table, took her 14 months to get it because of the supply chain issues and all the shutdowns. If none of that applies to you, then you must have seen at least a 25% drop in your gross revenue. And there's a whole definition of gross revenue. It's not how you and I define. There are IRS specific rules. So is there a straightforward place? Not really. So this is where sitting down with an SBDC advisor or your CPA or your bookkeeper, whoever is qualified to talk about it, would be essential. Now, Lauren, you may remember the webinars we have done on ERTC are at least 45 minutes to 50 minutes. So that's a whole topic on its own. if there's enough interest, I'm happy to do the ERTC webinar again. But if you're looking for a simple linear thing, it's hard to find, because if you're not shut down, if you're not partially shut down, if your key supplier or vendor was not fully or partially shut down, and or if you didn't see a significant drop in revenue, good luck qualifying. And also then there are rules, which employee qualifies, which employee doesn't qualify. And under some cases, if you're the business owner, under some cases, your wages qualify. Under other circumstances, your wages do not qualify. So there is no, and keep in mind, from what the IRS has said, going forward, it will be one of the key audit issues. So anybody and everybody who has applied for it and will apply for it, there's a high risk of audit for those folks. Doesn't mean you did something wrong. They just want to know, hey, during the pandemic, you told us you were shut down. We don't know, prove it to us. And if you prove it to them, they will go away. But if you have those gray area rule applications and you don't qualify, they will ask for all that money back, plus interest, plus penalties. So my suggestion to you is work with a qualified advisor. Whether you do it on your own, then work with a qualified advisor at the SBDC to do it so that you can know whether you truly qualify or not. And if you do, how to document it. So if you are audited, you don't lose any sleep over it. But ERC is a whole different beast on its own. Any follow-up or any other questions that may have come in?
I think we're okay, GB. There's one more regarding ERC.
Okay.
What if we saw a significant drop, but most importantly, our clients were shut down?
Clients don't qualify, because if the clients were shut down, they qualify for ERC, not you. If you couldn't make money and your payroll was at risk because you were waiting for a key component or a key something and somebody else couldn't deliver it to you and you couldn't fulfill a contract, which means your and your employees' wages were at risk, you qualify for ERC. If your clients did not, well, that's their problem. They were in jeopardy. They may qualify for ERC. It doesn't go backwards. It only goes forward in the supply chain. But good question.
Let's see, GB.
If there's no
Great
question,
recap.
always early, it's a tax season. I mean, I know California got extensions, but I have clients in 35 states, so we don't. I'm happy to entertain more questions.
Well, the people are loving it. I'm getting a lot of thanks. Someone said, got it, thank you. Someone else said, great recap. So
thank you.
Evidently there are a lot of people, a lot of companies soliciting, hence these questions. So
even companies who, I used to be an advisor with Intuit, and they used to tell us that, GB, we know you know this much, but we are a software company. We just want you to focus on this much. And the reason I bring it up, there are a lot of companies out there who just read a few things, went to a webinar or two, and now they're peddling ERCs, and they charge, what, 25, 30% commission. So if you are expecting a $60,000 ERTC, they're going to take 18,000 of it. Now, your CPA, we charge far less to our clients, because for us, hey, you are a client, God willing, we have 10, 20, 30 years to make money with you. We're not going to take, but many of these companies that have popped up, this is a one shot for them. They just want you to sign up with them, get your credit, and they will take 25 or 30% of your money, because once this thing goes away, their revenue will drop to zero in that arena. For us, and other CPAs and EAs and bookkeepers and qualified SBDC advisors, we expect to work with our clients in long term, so we don't have to make all the money from them right now. So yes, there are a lot of companies that have popped up who are not even accounting, not even payroll. They're just sales companies. I get those offers. Hey, we'll get you, and then can you do the filing? So they're just sale. And for them, if you get audited and if they don't tell you how to properly document it, you're not going to find them, because they will be long gone by then. So you'll be stuck, and you will have to pay your CPA or yourself to defend your ERTC. So keep that in mind.
That's it for right now. I don't see any other. Oh, I do have a follow-up. There's that question about plug-in hybrids, and it looks like Pete was able to check the list, and the Ford Escape, that has a plug-in hybrid and it's on the list. So
Perfect.
you do
That's why the
qualify.
list is great. And the list, like I said, changes. So that's what I always tell my clients, look at the list. Before you go shopping, just pull up the list and just take, for our clients, we send them the list periodically, especially if they tell us, hey, GB, I want to go buy the car. They pay us, right? So we do the legwork for them. But yeah, the list, if the list says it, you're good to go. Just like opportunity zone credits. Some opportunity zones are in Beverly Hills. They're not lacking any opportunity, but they're on the list, so they qualify. So this is why I tell people, look at the list. If the government says this vehicle qualifies, take the credit, enjoy.
Let's see. Maddie Val says, do you know why insurance agents brokerage are not oh, this is something completely separate. Sorry, this is regarding the EOG program. Someone made a comment about disdain because LA County grants exclude LA City, and those businesses are excluded for this particular grant program. And it's actually just phase 2 of this grant program, GB, because the California Relief Fund offered monies for that demographic. So those businesses who are in LA City proper were able to receive those, assistance via that program. This program, the EOG program, phase 2, is that same pot of money. So it's I'm sorry, my camera's still off. So it's the same monies that were offered to those businesses before, and now they're offering it to another demographic. Let's see. And as we continue, per usual, when we hear about new grant programs, we always share it with our audiences. So we'll be sure to continue to do so.
And I'll tell everybody, all my clients, every tax code, every grant, everything is based upon some political or public policy. So sometimes things that may not make sense, and that's okay. That's how, if you buy gold in circular format, it could be under some circumstances exempt from sales taxes. In the rectangular format, it is not. Why? Because different countries supply different types of gold. And if you have a best friend, everything is forgiven. Somebody you don't like, we all have that preference, and public policy and political philosophy is no different. And this is what is reflected in grants and tax codes and everything else in between.
Yeah. Good point, GB. Thanks. Let's see. Someone's asking where can you get the list? We do have a link, and it's actually in the chat. One of our viewers was able to put that in there for us. Otherwise, GB, would you just suggest that they Google it?
Yeah, as long as the list is on there. And so this is a list for 2023 and after that. So let me do the screen share one more time. So thank you, viewer, who shared that list. And can you see my screen or not yet?
Not yet.
Okay. So when I click on that, let's see, link, let me try one more time. Okay.
Yes.
So this is the IRS 2023 or after credits. If you have 2022, then you will click on this one, new plug-in EV purchase before 2023. But on the 2023, you have the index of qualified manufacturers and vehicles. And this is where there are different manufacturers, Audi, BMW, Honda, Jaguar. So depending on which brand you're considering, you will click on that. So if you go into Tesla, now you have the Model 3, Model Y. As you can see, Model X, which is more than the 80,000 limit, doesn't qualify. So if you end up buying a Model Y with extra bells and whistles, you will not qualify. So this is a good list. So basically, as of right now, only Tesla 3 and Y qualify. Model S, Model X, they don't qualify. Yeah. So this is where the list can always change, especially for any of the smaller, like the Rivian. It's a little different there because it's a newer brand, right? Tesla's been around for many, many years now. So now it doesn't tell you here if they have reached a 200,000 limit or not, because again, it's not like somebody's magically counting these cars. There's sometimes a delay, but as long as a vehicle is on that list and this is where I always tell them to save the list, so that, because you never know. And so this is where the vehicles purchased in 2022 or before, this is a different list. So this is where the contract date and all that stuff kicks in. And if you go on here, let's say if you go down to Tesla, well, guess what? There's phased out, initiated already. And this is where they have Roadster, Model S. So in 2022, totally different list than 2023. And so they have further limitations when it's acquired through, credit available, 0. So as you can see, many of these credits are 0. So they're just different limits on different vehicles used and otherwise. So this list is always changing. And that's what I suggest to my clients to go on here. So thank you. Oh, I'm sorry, Lauren, did you share this list?
Oh, I reshared it. Looks
Oh,
like
you
it was
reshared it. Okay, got it.
Adane.
Okay. Oh, Adana. Thank you, Adana, for sharing that. I appreciate it. So if nothing else, if you don't mind, I'd like to end a little early today. I'd like to grab a quick bite to eat, and then next week I won't be here. I know Mike will be here, so I will see you all in 2 weeks.
Go eat, GB. Enjoy it. Thanks for today. It was awesome.
Thank you very much. Take care. Bye.
Bye, you too.